This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, August 7, 2026, and this is the New York pre-market. Now, let's get into it. Markets are holding their breath as the US economy prepares for its most critical employment check in months. With the VIX near multi-year lows but sentiment in extreme fear, traders are positioning for a potential volatility spike ahead of Friday's non-farm payrolls report. Let's get to the numbers.
Good morning, here is the pre-market snapshot. Major indices are trading lower with the Dow leading the decline. The S&P 500 tracked by SPY sits at $76.56, down 0.1%. The Nasdaq 100 tracked by QQQ is down 0.3% at $714.65. The Dow Jones Industrial Average, tracked by Diamonds, is the laggard, down 0.8% at $538.19. Small caps, tracked by the Russell 2000 ETF IWM, are also in the red, down 0.5% at $298.25.
A defensive posture as the market digests the quiet before the storm. Let's look at the corporate landscape.
Earnings activity is light today, but the crypto mining sector is showing significant pain. Core Scientific reported disappointing fourth-quarter results, turning lower in pre-market trading. CleanSpark missed revenue estimates, and Marathon Digital swung to a second-quarter loss as Bitcoin's price slump masked higher operational output. These three names are among the notable movers, reflecting the broader weakness in the digital asset mining space.
Crypto miners are under pressure, but the real story is waiting in the macro data. Let's check the economic calendar. All eyes are on the non-farm payrolls report releasing today, Friday, August 7th. This is the employment situation report, and it is the primary driver of market volatility right now. We do not have the consensus estimate for the print yet, but the context is clear. The federal funds rate is at 3.63%, and the 2-year, 10-year Treasury yield curve is flat at 44 basis points. A high-stakes release that could define the trend for the rest of the week. Let's check the risk desk. Spectre, anything on the risk radar?
The VIX closed yesterday at 15.81, down 0.6 points. While the index itself is low, the crypto fear and greed index is at 14 out of 100, signaling extreme fear. This divergence is the key risk signal. Low volatility in equities combined with extreme fear in crypto suggests the market is fragile. A single miss on the jobs report could trigger a disproportionate move in risk assets. There are no credit downgrades or geopolitical disruptions to add to this, but the sentiment disconnect is worth watching.
Fragile sentiment ahead of the data drop. Let's close out the brief.
Here is what to watch. First, the non-farm payrolls released today at 8:30 Eastern. Any deviation from the implied consensus of 57,000 will drive the S&P 500 and the dollar. Second, watch the technology sector. With QQQ down 0.3% and yields sticky, a strong jobs report could further pressure growth stocks. Third, monitor gold. It is supported by China's buying spree and Middle East dynamics, but a strong CPI print later in the week could erase those gains. The takeaway: volatility is coming. Position size matters more than direction today.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.